Well, let's talk to the international economist and business consultant, Vicky Pryce. Good to see you, Vicky. Welcome back to the programme. So as we were hearing there, rates in the US at their highest level in 22 years. Do you think that's it? Has the Fed done enough now?
Well, they've left the room open, really, for them to raise rates again if necessary. But it's interesting how everyone is talking about bringing inflation down to the target 2%. It's got to be remembered that this target that everyone is talking about is not meant to be met absolutely and kept at 2%. There are variations around that figure. So if they think, whether it's the Fed or any other central bank, think that the trend is perhaps going to be downwards, even if you are a little bit above it for a while, then the monetary policy needs to reflect that. So we should not be getting too hung up on this 2% rate. And it's absolutely true that in most countries still you have inflation above that. But look at the US, it's really only 1% above. Yes, of course, core inflation is slightly higher, but that's the case across the world. So my view is that, we really are very near the peak. And I think what your correspondent was saying in the States, that we need to watch that we don't actually encourage a move into recession, is absolutely spot on. And what I think the government is doing in the US is making sure on the fiscal front there is a lot of expenditure on the IRA, which is the Inflation Reduction Act, a lot of investment going into green measures and investment happening there in a big scale over the next few years. So I think that's going to, in a way, counter some of the negative monetary implications of what we're seeing right now.
So a rate rise in the US and a rate rise from the ECB as well. But similarly to the Fed, it's not made its direction of travel clear. Is everyone now just guessing?
Yes, everyone is just guessing. The interesting thing is that they had no choice but to raise rates now, because they had already said in June that they were going to do so, more or less. So here we are with this quarter-point increase happening. But it's interesting when you look at the words of Christine Lagarde at the conference, the press conference afterwards, and also, what the actual press release was suggesting. So the words were pretty much, we'll wait and see what happens next. We're going to be data determined. Let's find out how things are shaping up, perhaps by the time we meet again to decide. Whereas the actual press release was much more hawkish, that inflation is absolutely what it is that we're trying to master right now. But I think it's left if you like, a door open for a possibility of not raising rates again. And it is very worrying in Europe because, of course, unlike what's going on in the US, the economy is slowing down in front of our eyes. And it's very worrying right now, of course, because some of the southern European countries have done rather well because of tourism. Now with the fires and everything else, that is likely to affect that type of growth as well. So we're seeing Germany, of course, itself in recession. We've seen some estimates right now in terms of what businesses are planning to do being very negative. So yes, it is very dangerous raising interest rates right at the time when the economy, in fact, instead of showing some signs of recovery, is slowing down in front of our eyes, as I said before.
Vicky, great to talk to you. Thanks, as always, for joining us on the programme. That's Vicky Pryce, the international economist and business consultant.